Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. AMC had a shitty day, and I'm going to review what happened here and try to give you some perspective and my opinion on the matter. This is the 30-minute chart, and I stuck a W on there for Wednesday. AMC closed at 617, down 57 cents, or 8.46%. After hours, we added 8 cents to finish the session at 6.25, recapturing 1.3%. Guys, in my opinion, this was making a mountain out of a molehill. This wasn't retail panic selling, but more manipulation and drama from market makers and shorts. I can say that because if this were real panic selling by retail, it wouldn't have gained over 1% after hours. But I will present the facts and let you decide for yourself. And here's the story that caused us to set a new 52-week low today, brought to us by the shittiest place on the planet, Investor Place, where complete, unbiased, and balanced reporting is a thing of the past. AMC plans to issue 3 million more shares of AMC stock based on aggregate principal amount exchanged plus $27,700 aggregate accrued interest thereon. Through the relevant date of exchange, the common stock issued had an implied value of $7.47 per share, said AMC in a Form 8K filing. AMC also hinted that it may enter into additional equity for debt exchanges in the future, but is not obligated to do so. Well, nobody should be surprised by this, but we're going to use it as an excuse to pound down the stock. The news follows AMC's closing of its $350 million at-the-market offering earlier this month. AMC raised the capital through the sale of approximately 48 million shares. The company then used the proceeds to repurchase debt or exchange debt for equity, resulting in a liabilities reduction of $62.28 million. Thus far in 2023, AMC has raised $865 million of gross equity capital and lowered liabilities by approximately $440 million by reducing our corporate borrowings by approximately $350 million and repaying more than $90 million of COVID-19 related deferred rent liabilities, said CEO Adam Aron. I, for one, would like a little more detail on that deferred rent payout. Did we get any discount? Are there any savings involved? I think we should disclose that, since you spent our stock and money to do so. The article continued. Meanwhile, AMC stock has declined by more than 8% during the past month. This is likely the result of dilutive efforts of issuing new shares. Yeah, there can't be any other reason. With more cuts in the pie, each shareholder's stake or piece of the pie gets smaller. That is true. On a brighter note, AMC announced this morning that it would expand its presence in the premium gourmet candy sector by offering its own line of branded chocolate candies. These include chocolate-covered pretzels, almonds, raisins, and peanuts. The company's new sweets will be available in AMC theaters starting this week. AMC had previously collaborated with top confectioners for over a year in order to create its chocolates. Next year, the company has plans to expand its selection of sweets. Still, shareholders shouldn't get too excited, as food and beverage companies have historically carried low margins. Apparently, this asshole has never been to a theater. AMC's branded popcorn hasn't exactly had a significant effect on AMC stock either. Well, you want to know why it hasn't had a significant effect? One reason is morons like this author, Eddie, leave out critical information, like our popcorn line is featured in the world's largest retailer, Walmart, and has just been released in 2 other food chains. But worse than that is our own investor relations department refuses to release if we're selling out Walmart locations or not. That would be helpful. On your screen is the actual 8K from today. I would encourage you to go read it. It's short. So, Uncle Frank, do you have a problem with this equity for debt exchange? No. In fact, for a company deeply in debt, in an elevated rate environment, I'm for them over just selling stock to the market, and they do have the potential to set up rallies in the stock price in the future. After all, this makes for better income statements, right? Not financial advice or advisor. But I do have a problem with the timing and at the prices we are doing them at. You see, while we were having the greatest third quarter earnings call in our company's history, Adam was silent about these plans, but waited until pre-market the very next day to announce his intentions, thereby destroying what I thought was going to be one hell of a rally. You see, I would prefer if the company would build the price of our common stock and then swap equity for debt. Adam and our chief investment banker, Citi, also a short seller of AMC, do exactly the opposite every chance they get. I have a problem with our investor relations department being completely silent about all the wonderful things our company has accomplished, which in my opinion, if were promptly and continuously released, would further build the price of our stock, giving us more bang for the buck on transactions like these. I also have a beef with the company for not disclosing more detail. How long will these securities be restricted? Especially in light of how we let Antara out of the bag early, and they have terrorized us ever since, even to the point of getting themselves sued for short swing profits. I have a problem with Investor Place not mentioning once these are unregistered securities like a private placement, nor offering a definition for the benefit of its readers. I have a problem with Investor Place never mentioning the sheer percentage of AMC trades that are executed in the dark pools as opposed to lit markets. I have a problem with them never mentioning the avalanche-like history of fails to deliver on the stock or the relentless spoofing of the stock, which is done in the open. I'm delighted Eddie Pan mentioned our new premium gourmet candies and then immediately added they carry low profit margins, but failed to mention in this very quarter we expanded into the global distribution business with Taylor Swift and Beyonce and are already listed amongst the top 10 companies in this business. That seems like a big item to overlook, wouldn't you say, Eddie? And speaking of our chief investment banker, Citigroup, the author of our APE preferred dividend, its conversion and reverse split, and of course now its disappearance, a short seller of AMC with a sell recommendation on our stock for years, it would appear that the garage sale and business closures continue. Headline from CNBC: Citigroup to close global distressed debt business as part of CEO Jane Fraser's overhaul. From the article, Citigroup is shuttering another Wall Street business as CEO Jane Fraser pushes ahead with her overhaul of the bank, CNBC has learned. The company decided to close its global distressed debt group, according to people with direct knowledge of the move. Citigroup is exiting businesses with poor returns to bolster the bank's odds of hitting Fraser's performance targets. She announced the latest overhaul of the third biggest U.S. bank by assets in September, and has since moved to trim executives and pare back businesses. Internally, the effort is known as Project Bora Bora. Last week, the bank announced it was closing its municipal bond trading operations. Guys, that was once the envy of Wall Street, by the way, and a once thriving business with about 100 employees that had fallen on hard times. The distressed debt group which trades the bonds and other securities of companies in or approaching bankruptcy, employs about 40 people, said the people who declined to be identified, speaking about the strategic moves. Citigroup didn't immediately comment for this piece. Yeah, I'll bet they didn't. As I've said before, guys, this is not financial advice, and I am not a financial advisor. I will never tell you to buy, sell, or hold any security, option, or cryptocurrency. I was in there today buying this dip. The fact remains Wall Street runs our board via Morgan Stanley. Adam will continue to do this shit with Citi, and there's little we can do about it for now. I believe Adam will spend the rest of his natural life in a courtroom or worse, and even more things will come to light as investigations and cases make their way through the courts. The hedgies will continue their tactics and manipulate the stock right up to the moment they no longer can. They will persist in trying to shake us out, and I believe as we pass into the new year, the hit pieces from the financial media will hit a fevered pitch as the desperation of their overlords grow. The only thing our enemies fear is the one thing they can't control. They can't negotiate with or manipulate. They can't predict, and that's the black or white swans, as they are great equalizers, great exposers of corruption, and they have a way of coming when you least expect them and when you least want them, and they turn the corrupt against the corrupt, but most importantly in our case, the prime brokers against their best customers, the predatory hedge funds, and that's when the margin calls begin. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.